Yeah, so the more you practice, the more, as in some of the things, you get rid of some of the things. But if you don't practice, it becomes like the market becomes strange. You get scared of the market. You get it. So you need to practice a lot so that you know what is happening in the market. So as I'm saying, a lot of people kind of, when the market is moving, they don't wait for confirmations and those stuffs. So when it comes to trading success, I've done a short video about this thing. You need to understand this concept. You need to understand these three things. Technically, these three things are very, very important when it comes to you getting the direction of the market well, or your trading success. These three things plays a role when it comes to your trading success. You need to have an understanding on the trends. I would say, let me put it this way so that everyone will understand. First of all, you need to understand the direction. You get it? You need to understand this thing, the direction. This plays a major role when it comes to you speculating correctly. The direction of the market, it can also be called the trend. Okay, it can also be called a trend. If you understand these things, the chances of you getting, as in your speculation or you getting your prediction wrong, is very slim. If you understand this concept and you can read the market very well, getting this concept, understanding this concept is going to help you to, as in, reduce your losses. I'm not going to say you are not going to lose. Everyone loses when it comes to trading, no matter your stage or no matter the number of years you've traded, you are still going to experience or encounter some challenges or losses. So, but when you understand this concept, your losses are going to reduce. Okay, so the direction of the market is very, very important. You need to understand the direction of the market and your observation level. So, this is what I'm talking about. The reason why a lot of people mostly get it wrong is because they don't understand the observation levels. Why am I saying the observation levels are very important? They are very important because history has repeated itself on that level. Okay, history has been made on that level. Price has respected, price has created, price has reacted on that level in the past. So the chances that price, when price gets, or when, let me put it this way, when candles get to that levels again, history is itself. You get it? History is going to repeat itself. But if you are trading on a level where history has not repeated, there's no reaction or anything of that sort, the chances that price is going to pull back on you is very high. So taking this one as an example, so the observation level. So if I've joined my training before and this word is not familiar, like you are not used to this word, or maybe you've not heard of this word, it's the same thing as the reactional levels. The observation level is the same thing as what? What's the spelling? Observation. Is that the spelling? Observation levels can also be what? The support and resistance levels. Okay, the support and resistance level is the same thing as the reactional levels, the key levels. Some people call it other blocks and those stuff. So what I'm trying to say is what these observation levels, history has been made before. You get it? This level, there was this key level over here. This key level, okay, this is a fresh resistance level. This is a fresh observation level. So anytime price is coming back, pulling up again, the chances that history is going to repeat itself, price is going to struggle before any action any action will be made over here. So this is what you call battle level. Okay. So this is what you call someone's mic is. If you know your background is noisy, kindly mute yourself. Trying to see the person engage. If you know your background is noisy, kindly mute yourself. I'm not seeing. Okay, I've seen the person. Yeah. So this is what I'm trying to see. with this level, price has what? Reacted over here. So the chances that if price is coming back over here, we are going to see a battle over here is very high. Okay. The participants in the market are buyers and sellers. So the chances that when price come over here, we are going to see reaction is very high. But one thing is what? A lot of people, when price even get to this side, they don't consider the levels. And if they are still in a trade, what they will do is what? They will still be exposed. They will expose themselves and the market will just bounce on them. When it comes to certain time frames in the market, these levels are very crucial when it comes to the higher time frame, like the monthly time frame, the weekly time frame, the daily time frame. When you see a reactional levels being created over here, the chances that price is going to, a reaction is going to, and you don't know the outcome. Either price is going to bounce back or break out, you don't know. You get it? So these levels are very important. So when I want to take a buy, first of all, I have to know the direction of the market. After getting to know the direction of the market, I have to trade on these levels, okay? So if you want to, maybe now the trend is, let's say maybe it's a downtrend. If I want to take a sell, I have to make sure I don't have to what? Trade over here. I don't have to trade, maybe take a sell over here. Why am I taking a sell over here? It is not safe if I take a sell over here, because the chances that price will what? Price will just come up again is very high. So I need to wait for price to come back over here before I will execute. So that is what you have to be doing. You get it? So I say last week, for instance, I predicted a lot. I got a lot of the market direction where price is going to go. But if price hasn't gotten to a level where I'm very comfortable, I'm not going to be executed. So it's not something complex. Just get these principles that I'm talking about. Know the direction of the market. And this is very, very important. If you come to the market and you don't know where you are, like the bias you are taking, you get it? If you come to the market and you don't know the bias you are taking, are you going to take a buy? Are you going to take a sell? It becomes a problem. So when you come to the market, know who is in control of the market, who is in the control of the market. So you need to have what? Understanding of what? Market structure. So for me, so for me, as an example, I blend what? Candle structure and what? Pattern structure. So candle structure is when you are taking the candles individually. You get it? When you are taking the candles individually, knowing if it is making more of higher highs and higher lows. And taking, if it is an uptrend, it is making more of higher highs and higher lows. If it's a downtrend, making more of what? Lower lows and lower high. And you what? Pay attention to pattern structure too as well. So I combine these two concepts, pattern structure and what? Pattern structure and candle structure. This is the idea. And it works a lot. Those who have been using this, those who have been applying this concept can attest to it that it works a lot. If you understand how to read it very well, if you understand how to read candle structure and pattern structure, it works very well. So let me break the candle structure to you guys. So when it comes to candle structure, the market, okay, the market is either moving up or it's either moving down. These are the alternatives that the market mostly gives it to us. So the alternatives are either you take a buy or you take a sell. These are the options that we mostly contemplate on, okay, or decide on. It's either we take a buy or we take a sell. You get it? It's either we take a buy or we take a sell. So these are the options that have been given to us. So when it comes to candle structure, you get it? With candle structure, if the market is an uptrend, what it means is what? Buyers are dominating the market. When it comes to a downtrend, it means what? Sellers are dominating the market. These are the two market participants. So when it comes to candle structure, you see something like this, okay? So this is a full body candle. So with a full body candle, this is what you see. You see the market doing something like this is what? An uptrend. And with every candle, it makes highs and lows, opening and close of candles. So this is not the time for me to talk about these things. If you have already joined my training before, you understand this concept. So this is a bullish candle. So this is the opening, this is the low. Okay. So if the ongoing, for us to know that the next candle is going to move up, buyers are going to dominate. What is going to help us to know that is what? When it breaks the previous candle high. So where is the high of this candle? This is the high, okay? This is the high, and this is the low of the candle. This is the high of the candle. This is the low of the candle. So for me to know that the next candle is going to move up or continue moving up, it has to break the high for it to confirm. So the moment it breaks the high, it means that price is going to get to the next what? Observation level. You get it? So let's say when it take this area over here, the next observation level is over here. The next observation level is over here. So what it means is what? Anytime price breaks the high of this one, the chances, listen, it is not 100% certain. The chances that price is going to continue moving to this level is very high. That's what you need to pay attention to. You get it? That's what you need to pay attention to. So when it breaks the high of this point, when it breaks the high, it means that the next candle is going to keep on moving up. That's what you need to understand. So for us to know that the next candle is going to also keep on, the moment this one closes, if it breaks the high of this one, it means that what? Candle structure is going to keep on moving to the next. The chances that candle structure is going to keep on moving to the next zone is very high. You get it? So this is what we call candle structure. It's making more of higher highs and higher lows. Okay, so this is the high, this is the low. So it breaks this one, it makes high. It breaks this one, it makes high. And the lows keeps on maintaining. The lows keeps on maintaining. So the rule says that what? It should make more of higher highs and what? Higher lows. So the low shouldn't be broken. So when you see something of this sort, it tells you that what? There's more buying momentum or more buying pressure in the market. You get it? There's more buying pressure in the market. It means that buyers are dominating this market. So when you see something of this sort in the market, you don't have to be trying to what? Go against what the market is saying. You get me? You don't have to be going against what the market is saying or what the market is trying to tell you. You get it? What it simply means is what? Buyers are dominating at this point. So you have to go for what? Try to look for a buy, not a sell. Okay, a lot of people get it confused, and when they come to the market, they don't know the decision to take. Should I take a buy? Should I take a sell? You get it? And they start doing a guessing work. It doesn't work that way. Understand this concept. You get, so this is what you call candle structure. So price will keep on moving up. Okay, it breaks the next one. So this serves as what? A gauge. Okay, this is a gauge for me to take an entry. The moment maybe the high will be taken, then I will know that the chances that price will keep on moving is very high. So it serves as what? An additional confluence in the trade that I'm taking. So this is what? An uptrend. And if it is a downtrend too, it should keep on making what? And you all know that you are familiar with what? The red candle when it comes to a bearish candle. So we are going to be seeing the candle also making what? A candle making lower lows. So what is going to show or what is going to signal that the next candle is going to what? Keep on moving to the next observation level or the reactional level. So when it breaks the low of this one, it's signal that what? Price is going to keep on moving to the next observation level. You get it? The next observation level. This is how it works. Okay, so what is going to signal that this one is also going to move? When it breaks this one, it gives me a clue that price will keep on moving. You get it? Price will keep on moving. So this is the concept. This is what we call candle structure. With this one, we are taking the candles individually to know what is happening in the market. Okay, so when you see something like this, it tells us that what? Buyers are what? There was buying pressure in the market. When you take something like this, there was selling pressure in the market. So a lot of people, especially to those who have joined my training before, are kind of now confused on why do I even take a counter trend trade and those things. Because when it comes to counter trend trade, you need to understand the concept of candle structure. You get it? You need to understand you have to get the understanding of candle structure. You get, with your understanding of candle structure, you can take a counter trend trade, even if the pattern structure is what? An uptrend. Okay, so when I see something like this, buyers are in control. When I see something like this, sellers are in control. And when it comes to what? When it comes to pattern structure, it is when you combine when you combine two or more candles together to what? Identify the direction of the market. So when you see the market making more of what? Higher highs simply means accumulation of what? Bullish candles. The market keeps on doing something of this sort. It keeps on making higher high and higher. So with this one, how you are going to know that the trend has shifted direction to a downtrend is when it has broken the low of this point. Okay, when it breaks the low of this one, it's signal that what? The trend has shifted to what? A downtrend. Okay, so this is what, if you combine what I've done over here, we call it pattern structure. But if you are taking them, if you are reading the market, or if you are reading the candles individually, it's signal that what? This is what? It's a candle structure. The concept is what? Candle structure. But if you combine them together, we call it what? Pattern structure. So with pattern structure, if you want to know that the market is in what? An uptrend, you see more of what? Higher highs and higher lows. Higher highs and higher lows, higher highs and higher lows. I know a lot of people, those who are already trading, are familiar with this concept. So this means what? The market is in what? Buyers are dominating this market. You get it? So you see more of what? Higher high. So continuation of bullish candles, continuation of bearish candles, bearish candle. That means what? Higher low. You get it? Higher high means what? Continuation of what? Bullish candles. Higher low means what? Continuation of bearish candles. So you keep on seeing these things. You get it? And what this concept means is what? When it is in an uptrend, what? Okay, when it is in an uptrend, the higher low shouldn't be taken. You get it? It should keep on taking the higher highs, but the higher lows shouldn't be taken. The only point, or the only way, or the only time when the higher low is going to be taken is when the trend is trying to shift. And you have some exceptions. At a certain point, the higher low can be taken, but it will still maintain its direction. If it's an uptrend, it's still going to maintain its direction as an uptrend. With that one, it's an exception. And those who have joined my training before, I explained, we call it complex structure. At a certain point, the higher low will be taken, but still it's an uptrend. Okay, that concept is deep. I can't talk about it here. You get it? So this is what? An uptrend, accumulation of what? Bullish candles, accumulation of bearish candles, accumulation of bullish candles, bearish candle. This is what? An uptrend. And if it is a downtrend, you see more of what? Lower lows. You see more of what? Lower lows and lower highs, lower lows and lower highs, lower lows and lower high. You get it? At this point, the trend is what? A downtrend. When you see something like this, it means that trend is a downtrend. So I know this is a basic concept. Those who are already into trading, those who have traded for long, this concept is what? Simple. But this is the concept you are going to use to read the market. You get it? So when you come to the market first, or when you come to the market, the most important thing you need to understand about the market is what? Ask yourself, what is candle structure telling you? What is what? Pattern structure telling you? You get it? So when you take this current market, I was doing back testing, so you can see it over. This is not a current market for gold. So when you come to this market, maybe if I've come to the market early morning and you are seeing something like this, I know a lot of people are kind of confused. Where will I even start? And those, you don't have to go far, go back. Okay, you just have to just stand over here. When I come to the market, I have to ask myself, what is candle structure telling me? What is pattern structure telling me? So when I watch this market, what is the candle, or what is the previous candle? How did the previous candle close? I have to ask myself, how did the previous candle close? Let's say maybe this is a closure, a candle closure, and this is the candle that has closed. I have to ask myself, what's a candle? Or what is the previous candle? How did it happen? The closure of the previous candle. The previous candle is what? A bearish candle. You get it? And I'll ask myself, what is the pattern structure? I have to first of all even ask myself, what is the pattern structure telling me? That's when I'm going to just count. I'm going to just base on history. I'm going to analyze the market based on historic price data. You get it? So when I come to the market, I have to ask myself, I don't have to go back because I've done it for long. It's easy for me to know what pattern structure is telling me. But if you are young, if you are starting out, you can start over here. Okay, you don't have to go back. So this is what? Doing more of lower lows and lower highs, lower lows and lower high. So at this point, the trend is what? The moment it breaks this one, the trend is what? An uptrend. You get me? The trend at this point is an uptrend. You get it? The trend is an uptrend. Okay, so I'll just have it at the back of my head. The trend at this point is what? An uptrend. Okay, what is candle structure telling me? Candle structure 2 is also telling me what? It is bearish. Pattern structure is telling me the market is what? Bullish. Okay, because the moment this point got taken, the trend shifted to what? An uptrend. So at this point, the trend is what? A bullish trend. You get it? The trend at this point is a bullish trend. But candle structure is telling me what? The trend is what? A bearish. So you see this thing. You see the differences. Candle structure is telling you different thing. Pattern structure is telling you different thing. So when it comes to the session, okay, the session you are trading, candle structure plays a role than pattern structure. You get it? Candle structure plays a key role. So most often I don't try to go against the what? Candle structure when it comes to me trading in a session. I hope you people can hear me. Can you people hear me?
Yes.
All right. So when I come to the session, I don't go against the candle structure. You get it? So when I come to the market and the previous candle closed bearish, I have to make sure, I have to be very careful. And pattern structure is telling me the market is what? An uptrend. One thing you need to understand is what? If you try to take a sell, you are counter trending. What it simply means is what? You are going against the main direction of the market. You are going against the direction of the market. Okay, pattern structure. You are going against the pattern structure. So if this one is telling me a bullish and a candle structure is telling me bearish, if I want to take a sell, I need to understand that what I need to understand about the decision I'm about to take is what? It's a high risk, even though trading is very risky, but some of the decisions is as in the percentage, attaching percentage to these ones. Some of the percentage when it comes to the risks involved, some of the decisions are having high risks as compared to some. The reason some are having high risks as compared to the other is because based on your observation, based on your experience, some of the decisions that you've taken, you've noticed that it mostly happens a lot often, or it mostly plays out most often. You get as compared to some of the decisions you want to take. So you need to be very careful. So if I want to take a sell at this point, it is very risky. You get it? But so I need to, if it is risky, you need to make sure your confirmation. So with this three concepts, I didn't even add the entries too. So you need to understand your entries. Okay, so basically when I come to the market, these are the three things I mostly consider: direction, the trend, market structure, candle pattern, or pattern structure rather. Supposed to be pattern structure, candle and pattern structure. You get it? I need to understand this. So these are the three things I always consider. So at this point, if I want to take a sell, it is very risky. So before I will even take the sell, as I said, when I come to the session, I look at how the previous candle closed. It's very, very important because mostly when it comes to your sessional decision making, price mostly goes with how the previous candle closed. Okay, how the previous candle closed. When it comes to me observing gold, how it's moving these days, it mostly follows what the previous, unless maybe it has gotten to a key level before it will start rejecting. But pattern structure is very important, candle structure is very important. But the point where pattern structure, the point where pattern structure is bullish, candle structure is bullish, then you are good to go. Okay, you are good to go. So what I'm trying to say is if you take this market as an example, if I take this market, what is the trend of the market at this point? The trend of the market is what? Pattern structure is what? A bearish move, because it's making more of what? Lower lows and lower highs. So at this point, the trend is what? A downtrend. How did the previous candle close? It closed bearish. So it aligns with pattern structure. So at this point, I will confidently try to look for a sell signal. Okay, I will confidently try to look for a sell entry or a sell signal. But at points where pattern structure is telling you different thing, candle structure is telling you different thing, it becomes very confusing, and you need to be very cautious, very careful when it comes to your decision making. This is the concept. This is what I use, the concept that I apply when it comes to my day-to-day decision making in the forex market or the financial market. So this is what you were discussing. So at this point, what I would do is what? Since price has already got into this key level and pattern structure is what? A bearish trend, I have to make sure I will wait patiently to see what the next candle is going to go, okay, or do. Because if I want to take a sell over here, a counter trend sell, where to even take the trade, that is where the observation levels, what? The observation levels plays a role. So you need to what? Understand how to identify the valid and the invalid level. Some of the levels are not valid, as in they are not important when it comes to your current decision making. If I want to take a sell over here and I come over here to look for a key level, it is not important. If I come here to look for a key level, it is not important because price has already failed, come to this level. It is history that has happened in the past. And I'm not going to be used, even though we use historic data to what? Make decisions. But at this point, price getting to these levels are not important to me. Price getting over here, these levels are not important. What I'm going to be focusing on is when price has got into this area is what is important to me at this point. These levels are not important. So you need to understand your key levels, okay? Understand your valid and invalid levels. Understand which level is valid when it comes to you standing and what? Shooting. You get it? Last time I explained how the snipers shoot. Okay, they don't stand at any area and start shooting. They have to make sure they get the target right. So it is the same thing when it comes to trading. So your valid and the invalid levels are very, very important. You get it? So at this point, the valid level is only here and this point. The valid level is this point and where? This point. So if I want to take a sell, then at this point, I have to wait for price to maybe come to this side before I will confidently what? I'll be comfortable taking the sell. You get it? So the key levels are very, very important. So if you don't understand the levels that you have to take a trade, then you are getting things wrong. Because in my private group, if I'm discussing, maybe I'm running a commentary on what maybe an instrument is going to do, or maybe a currency pair is going to do. The moment they see it moving, someone will be asking, should I buy, should I sell? If you don't get your observation level right and you don't get your entries right, you're always going to be saying the market is against you. You get it? You're always going to be saying the market is against you. So you have to make sure you understand this concept that I'm telling you. You get it? The observation levels, the key levels are very, very important. So you have to wait for price to what? Come to those levels before you look for entry. So basically, these are the three things that I mostly pay attention to when I'm executing. You get it? At this point, is anyone having a question before I proceed? Are you getting what I'm trying to bring on board? Are you people getting it? Or someone is confused?
We get it.
You get it? Okay. So is anyone having a question at this point? At this point in the presentation, is anyone having a question? Is anyone having a question? Okay, so when it comes to the high probability trades and the low probability trades, as I said earlier, you have to make sure the trend when it comes to the pattern structure and candle structure are in the same direction. Okay, if the candle structure and the pattern structure are in the same direction, it's mostly what helps you to what? As in the chances of price moving in your direction is very high. Okay, but points where candle structure and pattern structure are saying different things, it becomes very difficult. It becomes very hard for you to make decisions. You get it? It becomes very hard to make decisions. So let's try to do some analysis over here. Let's try to do some. I was already doing some back testing before I called out this session. Okay, so let's continue. So this is, let's say maybe this is a chart of 2022 October. So maybe, okay, this is forex.com. How to use, I wonder. Okay, so maybe if you come to the chart, okay, maybe if you come to the chart and you see something like this, you need to first of all, as I said, ask yourself, what is the direction of the market? You get it? You need to ask yourself, what is the direction? So at this point, with my experience, I can easily know that the market is what? In a downtrend. So lower lows, lower highs, lower lows, lower highs, lower lows. So a lot of people are following. One thing you need to understand is what? Trading, what is going to speed up your journey is you focusing on the little things. But a lot of people are trying to learn every concept. That is not what is going to guarantee your success in this. Focus on the few things and what? Try to what? To make it better. You get it? And when it comes to your patterns, when it comes to even the patterns that you trade, know which one mostly plays out and which one mostly what? As in the chances of it playing out is very low. Focus on the ones that high probabilities. It's not about you having the feeling of being in a trade. That is not what brings in money. Taking the high quality trades are what brings. How are you going to know this trade is a high quality trade? Based on your data. So if you are here and you are not taking data, you are not taking records of the trades that you are taking, then it's going to be very difficult for you to be confident in your system. Okay, it's going to be very, very difficult for you to be confident. So some of the setups, when I started out seeing it playing out, I wasn't confident. Okay, I wasn't confident. But then as I keep on seeing it, the confidence automatically started building up. You get it? But if you are not having data, if you have not observed something playing out more often, and you start putting your money on it, then you are gambling. That is when the gambling this thing comes in. Even though trading is all about speculation, but at a certain point, I can confidently say that this trade is having high probability trade as compared to this one because of what? My experience and the number of times that I've seen it happening in the market. But a lot of people are not having any data. A lot of people are not keeping track. They are not journaling their results or what? Their activities in the market. Okay, so you need to journal. You need to keep track of your activities. So at this point, the previous candle also closed bearish. So at this point, we are not going to trade the Asian session. So if you look at this candle is what? 17. This was around 5 p.m. I'm not interested in this trade because the timing was wrong. If you don't pay attention to the trading times too, you are always going to enter trade at the wrong time where volume is not in the market. What drives the market is what? Institutions and what? The hedge funds, those who are trading with big volumes, the government, the big organization, those are the people who are moving huge funds across what? The globe. So if you are trading at the time that these people are not available, the chances that you are going to get things wrong is very high, even though everything aligns, but you are still going to fail. So trade with the time that these people are playing. So this timing is very bad. So we are not going to execute. And one thing too is what? Risk management is very important. You get it? Risk management is very important. Not every trade is going to move in your favor. But if you understand, if you understand your data, and you can easily maybe refer someone to the same trade that you've taken and it has played out. If you lose a trade, don't as in panic, or don't doubt yourself that is this thing really going to work. If you have a data that you've seen this particular setup playing out like 10 times or more than 10 times, and if you take a trade on it and it fails, maybe just the market condition. Okay, so you need to be confident. So that's when the confidence comes in. A lot of people keep on switching from strategy to strategy is because they don't have data backing it and they think like what they are doing is wrong. But if you have data, you can easily reference it, or you can easily go back and refer it to just maybe build confidence that, oh, this thing has really happened. I've even taken a trade on it like several times and it has been playing out. Maybe this time just market condition that is not in my favor, or the probabilities are not in my favor at this point. So that's what you need to understand. Okay, so looking at this one too, the timing is not yet. So timing is very, very important. So what time is this? This is around what? What do you call it? The closure of this candle. This candle started, it's open at 1 a.m. and it's going to close at 5 a.m. So this is pre-lending session. I mostly don't trade during that time. I trade an hour to major market session. Okay, 1 hour, 30 minutes, or an hour to major market session. So this candle, the time that it's open, major market session is not what approaching. Okay, or maybe the lending or the New York session is not approaching. So at this point, I'm not going to be interested. So you need to understand the direction of the market at this point. What's the direction of the market? So as I told you earlier, it is making more of higher highs because you are seeing all bearish candles, and bullish candle came in. So this one becomes as in a lot. You saw some bullish candles coming in and bearish candle, but this is a complex structure. Okay, so it's still what? A downtrend. The moment this high lows got taken, the trend shifted to what? A downtrend. So at this point, the moment you understood that the market is what? In a downtrend, and candle structure too is in a downtrend, you can confidently what? Look for a sell. So this is what one part, as I told you, the trend. Okay, so we check the trend. The trend was what? A downtrend. Okay, the trend is what? A downtrend. So ask yourself, what is pattern structure telling you? So pattern structure is saying what? The trend is a downtrend. What is what do you call it? The candle structure to telling you. So candle structure 2 is also what? A downtrend. So at this point, I don't have to even be checking if I will take a sell, a buy. The only point I would love to be taking a buy is when maybe candle structure has shifted to a bullish thing before I will try to take a buy. But with that one, since pattern structure has not shifted, I understand the consequence. You get it? So at this point, I'll just have to, this is the first part. So after getting to understand this one, then you look for the levels. Okay, you look for levels where you are going to shoot, where you are going to execute. Don't feel the FOMO, fear of missing out. As the price moving and you feel like, oh, price is moving, price has moved. If it's moved from, let's say, your observation level, if it's moved from your key level, kindly understand that you have missed out the trade. Don't force things. Okay, you have missed. Maybe you didn't come to the market early to catch that move, or maybe the setup didn't align with the way you execute trade. So just understand and move on. You get it? So what did this one close? It closed on what? If you look at your left, there was key level over here. So this is the next reactional level. And if you watch this candle, you notice that it closed on this level exactly. But still the trend is what? A downtrend. So if you are trading a high volatile pair like gold, okay, an instrument like gold, this is where you can move to the lower time frames and look for a sell. So at this point, this is where you are going to be looking for a sell, because pattern structure is a downtrend, candle structure is a downtrend. So at this point, you are going to be looking for a sell. Am I going to randomly stand over here and take a sell? No. Why am I not going to stand over here to take a sell? Because there's no history over here that shows that price got rejected over here and it went back. You get it? There's no history. Where did history repeat itself? This is where history repeated itself. At this area, you get it? So I can confidently take a sell over here, because price got here and it just bounced back over here. Price the chances that when price gets over here, it will keep on moving down is very high. So that's what you need to understand. So when price, anything that will be happening over here is out of my business. I'm not concerned. It doesn't interest me to take any decision over here. When price gets to this point, this is my concern areas. Anything happening over here, I don't give a damn about it, because no history has repeated itself over here. I hope you understand what I'm trying to talk about. If you understand it, let me know. Am I making sense?
Yes, okay. Please.
Yeah, so you see the closure of the candle. What time is this candle going to close? This candle. So even if you watch this one, you get to understand that when price got over here, price wicked over here. Okay, this is an Asian session. I don't want to go there. When price wicked over here, what happened? Price decided to get back to the next reactional level. You see how my system is very simple. Price got to the next reactional level. You get it? So it's the same thing. when price come back over here again, the chances that price is going to come back to this level is very high. So as I said earlier, if you are trading a high volatile pair like gold, an instrument like gold, maybe gold, then you can maybe try to catch this very fast by moving to the lower time frames. So you can move to the H1 time frame and see what time is this. If price gets to this side and the candle has no close, the H4 candle has no close bullish, then you are going to be looking for what? A sell. You get it? So know that, and one thing too is what? The time frame is very important. Don't just know the time frame that is going to be your gauge. Okay, the time frame that is going to be your gauge. It's like trying to fill a bucket. Okay, you don't just pour the water at anything inside. You have a gauge. When the water gets to this level, I'm okay. It's the same thing when it comes to trading. When it comes to the time frame, which time frame is going to be your gauge? So for me, if you take the H4 has always been my gauge level. That is where I take my decision. If I want to take a sell, if H4, I analyze the H4, reading the pattern structure, reading the candle structure, and it tells me price is what? Moving bearish. Then if I move to the lower time frame, I have to be looking for what? A sell. That is my gauge time frame. You get it? That is my gauge time frame. So understand that. So my gauge time frame is telling me price is what? A bearish. So I need to what? Move to the lower time frames. I'm not interested in a sell at these levels. This is the levels I'm interested in taking a sell. But what time did this candle close? 9 o'clock. Okay, so that means a new 4-hour candle has closed, and it closed. The chances that it closed bullish because the way this one formed tells you that it's closed bullish. Let's go back to the H4. So you see it closed bullish. Okay, it's closed bullish because if you look at this one, this is 9 a.m. and the other candle was 5. Okay, 4 hour. For every 4 hour, a new candle forms. So this one, a new H4 candle formed over here. Okay, a new H4 candle. Let me move to the 15-minute time frame maybe. Okay, so I think H4 was not giving us a details. So let's start it again. So before this candle was over here, H1 was kind of not giving us details. So let's move to the 15 rather. So as I said, I'm not interested in a sell at this point. The only point I'm interested in taking a sell is when price gets to this level. Okay. So what is happening over here, I'll just be sitting and be watching. So at this point, you see, price never got to the level that I wanted to take the decision. So this is where a lot of people, those with no plan when it comes to trading, they feel like, oh, I'm missing out, then they will just jump in. I wanted price, the candle, to come and touch this one. I wanted to see something like this. I wanted to see something like this. Like what is happening over here. I wanted to see it over here. Then I will ride it to this side. But see where it ended. So I'm very sure because of what is the consolidation happening over here. You get it. You see multiple rejection level, multiple rejection level. What time was it? So it's happened at volume time. So when price has not gotten to the level that you intended of taking a decision on, you just have to let it go. You get it. Let me see, maybe if the daily time frame is going to, okay, so this is where the daily time frame formed. Okay, there was no level over there. So there was a level over here. So at this point, okay, so this is what I was expecting. I was expecting price to do something like this on this level before I would take the trade. Okay. So if price gets here, if price does not get to this point, I'm not going to what? Execute. You get it? I'm not going to execute. So you just let it go. Even though you have a clue on where price is going to go, but because it doesn't align with what you want to do, you just let it go. Okay. So at this point, this is 9. A new candle has what? Closed. So we just miss out on the trade. You get it? And a new bullish candle is forming. So what I'm trying to say is what? If you understand the direction of the market with the key levels and with what? The time of the day, okay? If you understand it with the time of the day, things become very simple and easy. So let's fast forward price and see. So what time is this? Let's ask ourselves. So we are not paying attention to the daily time frame and what? You are not paying attention to the daily time frame and what is happening at the weekly and the news event that is happening. So it is a high distance, but because it's back testing, you don't lose anything. We are just trying to test our system and see if it works. Okay, so if you look at this one is going to close at what? 1 p.m. because it started at 9. So this one is going to close at 1 p.m. So with this one, if I come to the market and see something like this, the pattern structure is what? A downtrend. But candle structure is currently what? An uptrend. Okay, it's currently an uptrend. So if you are taking a buy, it's a counter trend. Okay, it's a counter trend. Maybe if price maybe break this one and pull back over here, you can take a counter trend. But it's kind of very risky unless maybe you are taking it at a time where there was what? Volume in the market. But you need to understand the consequence. So at this point, I would love to see, okay, it is better if you are starting out and you don't want to experience more losses. It is better you wait for pattern structure to align with candle structure. So at this point, I'll wait for the 1 p.m. candle closure before I will take a decision. So it just moved very, very fast. Okay, it moved very fast. So what I'm trying to say is what? If you wanted to take a counter trend trade and how fast it is, what you can do over here, because at this point, candle structure is an uptrend because it has broken the previous candle high. And the level to take a trade, a buy, is when it has broken this one. So if it breaks this one, you can wait for a pullback for stronger confirmation. Then you take the decision. That's what I was trying to talk about. So at this point, this is a breakout. So if it breaks out like this, it's very risky, okay, to just jump into the trade. Unless maybe you notice that there was volume, or maybe the market is asking, there was speed in the market before you even try to execute. And if you watch how this candle opens, there was no pullback, okay? There was no wick or pullback over here to take. So if you take this one, the chance that price will pull back on you is very high. So if you miss it, you just miss it. Just let it go. So if price can pull back to this level, okay, that's fine. If price can pull back over here, you wait for a pullback, then we take the trade. Because what time are we in? We are in volume time. For 1 p.m. to 2 is what? New York Stock Exchange session. So if you see something like this, you see how price has retested, broken out, retested on the level neatly. So this is where you can take a buy. Okay, you place your stop loss over here and you take a buy. But one thing you need to understand is what? Since the candle has no close, it's a counter trend trade. But the reason why you are taking this aggressive trade is because of the time of the day. Okay, the time that you are in, volume is in the market. A lot of institutions are available at this point. So a very small signal telling you that price can move up or down, you can risk it. You get it? So if price breaks the high over here, the chances that price will keep on moving, fill this zone over here and keep on moving is very high. You get it? That's what you need to understand. So you get it. So since you know you are trading, you are taking counter trend trade, one thing is what? You need to be very aggressive when it comes to protecting your capital. You need to be very aggressive. So the first trade that we had is just a counter trend trade. Okay. The first trade we had is counter trend trade. So the only point you are going to know that it's an uptrend, price has shifted, is when price has broken and closed like this. At this point, it is now certain that the trend is an uptrend. But you can take a counter trend by your understanding of candle structure, because the highs of the previous bearish candles has been taken. The ongoing candle has taken the previous candle high too as well. You get it? So you can blend it with the zones. Okay, you can blend it with the zones and what you can take a counter trend trade. It's all about risks and understanding the time that you are in. You get it. So this is how you can take a counter trend trade, because the previous candle closed bullish. So the chances that if you're having high buying pressure in the market is very high. Okay. So this is how you can take a counter trend trade. Any question? Is anyone having a question? Do you guys get it?
Yes, please, I have a question.
Okay,
yes,
my time is up.
Please, can you hear me?
Okay, I'm listening. Yeah, I can hear you.
Okay, so please, in this case, should we always be on the H4?
That's correct.
You need, as I said, you need to know the direction. What is your gauge time frame? The H4 that I'm talking about is my gauge time frame. That is what guide me to make decisions. So if I want to take a sell, the H4 is my guide. If I want to take a buy, the H4 is my guide. So whatever is happening at the H4 is what is guiding me to make decision at the M15 time frame. So it doesn't mean you are going to blend all that. So when it comes to entries, you are not going to be static when it comes to the time frame you are going to be focusing on. Sometimes the H1 will give you a confirmation. I remember some time ago, I was focusing on the H4, but the moment I moved to the H1, I noticed that this time frame is giving me an entry. So you need to understand the time frame entries. Okay, when it comes to entries, you can focus on the H1, you can focus on M30. It all depends on the time frame that is presenting an opportunity for you. You get it? The time frame that is presenting an opportunity for you at that instant. So it's not when it comes to my focus time frame, I don't love or I don't like blending the daily and H4. It's kind of, some people blend the two together. But if we're starting out, focus on which one works for you well, or which one that is going to simplify your distance. Don't try to be everywhere. So for me, the H4 is my gauge. But when it comes to my observation levels and those stuffs, I start from the monthly to my H4 time frame. But when it comes to entries, pay attention to what the H4 is telling you. Pay attention to what the H1 is telling you. Pay attention to the M30. Flip through the time frames and see which one is presenting an opportunity at that moment. You get it?
Yes, please.
Yeah.
Thank you.
You're welcome. Any question? Any question? Any question again? So the direction of the market is very, very important. You get it? The direction of the market and the key levels are very, very important. So if you lose a lot of times, there may be you don't know how to read the market well. Okay, when it comes to the reading the market, one thing you need to make sure you are practicing it every day is how to read the market. Because like joke, how price moves, I don't know how maybe the algorithm was programmed based on this one, but it's really, really works if you understand how to read market structure, the higher highs and higher lows. It really, really works. You get it? It really, really works. So you need to pay attention to how price is respecting or going according to these patterns. The higher highs, if it's an uptrend, the higher highs and the higher lows. If it's a downtrend, the lower lows and the lower highs. So you are not going to get it a day. It takes time. You get it? Practicing. And at my level, if I tell you the number of hours I spent in to practice, you won't believe. You get it? So you need to practice. Trading is not like something like you just come in one day, you get it, then nah. You need to practice a lot. Some of the things becomes clearer when you keep on practicing. That is when it starts making sense. But if you think like it's going to, so that's why a lot of times I tell people, if you think at this point trading is going to just take care of your bills and those stuffs, it doesn't work. You need to get the skills before it will start paying you. Any question?
Yeah, hello, sir.
Yes, sir.
Hello.
I just want a quick one. When the market is on uptrend or downtrend, you made mention of the fact that you have to wait for the candle to close to have a confirmation. At times when you are looking at the 4-hour time frame, there are certain times that you realize that if you wait for the candle to close fully before you have a firm confirmation of the direction, at times the speed of the market takes it faster. Do you necessarily have to wait for the candle to close, or you can, if you see the direction, you can really ride on the direction?
So
Just
so you see,
Thank you.
one thing too that you have to understand is what you can't catch every move in the market. You can't catch every move in the market. All the moves that is happening in the market, it is not all of them that is going to align with your system. That is why you need to have a plan, a strategy on how you are going to execute your trade, a proven system that is going to base on how you execute. If you don't have a plan, that is when you start kind of, like you feel like that's when the intuition, your emotions start setting in, because you don't have any plan. You get it? So if it moves fast like this, if I understand pattern structure, the reason why you see this trade that I even took over here, it doesn't. So those who have joined my training before will say, oh, this is not their trade. You get it? Why? Because this is a counter trend when it comes to pattern structure. But if you understand candle structure, you notice that the previous candle has closed bullish candle, and what? It has closed strong bullish candle. It has now, the ongoing candle has broken the previous candle high. You get it? So I can move to the lower time frame. Since I'm taking a counter trend trade, I have to make sure I'm waiting for a stronger confirmation. Now I'm going to ride the move with what? The lower time, the candle structure. You get it? Why am I not taking a buy over here when price was moving? Because it doesn't align with my system. Okay, so I just let it go. The reason why I took this buy over here is because price has gotten to this key level. Okay, price has gotten to this key level. It has broken out. I wasn't interested in the breakout because price can just pull back. You get it? Price, like it's like a heartbeat. It's move heartbeat. Your heart will beat. It will pump, then calm down, pump, calm down, relax, pump, calm down. It's the same thing how the market moves. So this is just, is it exhalation and inhalation? So which one? If it is moving up, is it going to be inhalation or exhalation? Those science students over here, please, can you help me out? If it is moving up, is it inhalation or exhalation?
If it's moving up, it's inhalation.
Okay, so this is an inhalation, and since you understand that price is going to what? Exhale, what you are going to do is what? You wait for the exhalation, then you ride with what? The inhalation. You get it? So it will move up, it will pull down. Don't try to just, because this one, at this point, you have to be careful. You are trading a counter trend. So you have to wait for breakout and pull back on this level. You see how price pulled back on this level. Where did I get this level? I got it from the higher time frame. It's an observation level. And when price got to the observation level, what signal that price is going to keep on moving? There was what? A candle confirmation. See? So that is where psychology of candlesticks also comes in. See how this candle closed. Let's try to scrutinize. Let's try to examine this candle. See how this candle closed. See, those who have joined my training before understand wicks. So this tells you that what? Sellers were in control, pushing price down. Buyers came in and drove price down, up. You get it? So at this point, sellers are losing control. You see the long lower wick tells you that sellers have lost control. Buyers came in and drive price up. So a signal that there was buying momentum. On which level? On this level. Some people will call it hammer and those things, but understand the psychology. So on this key level. So when price breaks the high, okay, you see I'm not trying to rush. I waited patiently for the candle to close. When it takes the high, then I can risk, because this is not a guaranteed. All the rules that I'm trying to bring on place does not guarantee that price is going to move up. So at this point, when price breaks the high, that is when I'm going to risk. You get it? I'm going to bet on this one that price is going to keep on moving to the next reactional higher time frame reactional level. You get it? So you need to have rules when it comes to how to determine direction. You need to have rules. So with this one that I'm telling you, those times I wouldn't have even taken this trade. I know a lot of people who have followed me will understand that with those times I would have even allowed this trade to move. But you see, with my constant learning, I noticed that I could have taken advantage of what this counter trend by waiting for price to break out from the key level, coming to the key level before I would take it. So at this point, the moment the candle closed over here, candle pattern structure has shifted to what? An uptrend. You get it? So when it comes to your direction, have rules. Okay, so for me, when it comes to my direction, I follow pattern structure, and at certain points, I follow candle structure, how the previous candle is going. So last time I was telling those in my private group people that now I take counter trend. Like sometimes we analyze when you're talking about giving commentaries on trade. Okay, counter trend trade, how you can take a counter trend trade too. So that is the help of what? Candle structure. You get it? Candle structure. You can take a candle structure trade over here. You get, because the previous candle closed strong bullish, it has broken out from the key level. The chances that it will keep on moving to the next zone is very high. So have these rules in mind. Okay, have these rules in mind: candle structure and pattern structure. And so these three things that I listed over here: the direction, okay, the direction, steady this thing, the direction. How do you identify the direction? The trend or the market structure, and what? Your observation levels. I wanted us to do more back testing, but time, I have another meeting. So observation levels and what? Entry. So entry is when you consider the candles and those stuff. You get it? When you consider candles and those stuff. Any question again? I hope I've answered your question. Hello?
Yes, sir. Yes, sir, you have. Thank you.
Okay. Any question again? Maybe our next meeting, you start with the back testing. Any question again? So maybe with my next bootcamp, even if you have joined my bootcamp before, try to join, because there's new concepts that I've discovered. Okay, when it comes to the counter trend and those stuffs. So try, if you have the means or funds, to join. All right, so if there was no question, is anyone having a question?
Yes, sir. Any
Yes, sir,
concession for those who have joined before you want to join the new one?
Oh, I've not do this thing. I've not brought out the date, so I've not decided yet.
So when you are deciding, we'll be glad if you can factor that in your decision making.
Okay.
It's an appeal.
Yeah, so when it comes to gold trading, these two things that I told you, gold really respects structures and understanding the direction of the market. Gold trading is not that hard like that. If you understand the structures with the time of the day, you are going to get majority of the moves. So it's all about understanding the structure of the market. You are going to lose some trades, but with constant executing your plan, you are definitely going to come out successful. Okay, so if there was no question, you'll meet again next week with another topic. Yes, sir. Please, I'm listening. Hello, I'm listening.
Hello.
Yes, sir.
Thank you very much for the information. Yes, I wanted to know, most of the times the higher time frame gives a direction, but you don't see what the candles actually do unless you take a look at them on the lower time frame, especially with gold like this, like say maybe 15 minutes time frame or 5 minutes time frame. But then I've heard people say the uh, 30 minutes time frame is rather a stronger confirmation for entry. So I want to know what your take on that.
So when it comes to time frame and when it comes to entries and when it comes to time frame, one thing you need to understand is what the higher the time frame, the higher the stronger the higher the confirmation, as in the stronger the confirmation. The higher the time frame, the stronger the confirmation. So the way you are saying 30 minutes, you heard 30 minutes is the stronger confirmation. The same thing that when you get a confirmation from H1, it is stronger as compared to the 30 minutes. When you get confirmation from the H4, it is stronger as compared to what the H1 time frame. But the reason why we move towards the lower time frames like 15 minutes is what you need to understand the assets you are trading. When it comes to gold, if you are relying solely on the 30 minutes, you might miss out a lot of moves. So sometimes I see a lot of opportunities and waiting for the 15-minute candle closure, I miss a lot of trade. But I used to observe trades on the H5 time frame. Since I moved to trading gold, I used to observe trades on the 5-minute time frame. But one thing I've observed is what the 5-minute time frame gives confirmations. Sometimes it plays out. By the majority of times, it fails. You get it? So I've stopped waiting for trades on the 5 minutes. I watch only the 15, the 30, and the H1 when it comes to my entries. So don't just be listening or don't just be taking the words of random people that you see on the internet. You need to make sure you are also what? Observing it. Trading is all about observation. I've told you when price does this. I know a lot of people are not even going to practice. I know a lot of people who are just going to start implementing, betting their money on because I just said it now. They are not going to just demo trade on it, maybe back test and see what I was saying makes sense. A lot of people want the money badly as compared to getting the skill. And without the skill, you are not going to get the money. You get it? So anything that you hear, make sure you observe it yourself. I used to be hearing gold moves very fast, so you need to move to the 5 minutes. But with my constant observation, I noticed that what the 5 minutes, it plays out sometimes, but majority of the times it fails. You get it? It gives a lot of fake out confirmations. And sometimes me waiting for the 15-minute time frame, I will notice that I will miss a lot of moves and that stuff. But it's fine. It's better I wait for proper confirmation than jumping into something that I will constantly be losing money. Losing a lot sometimes affects your psychology. It makes you lose confidence in your system. So go for something that even though trading at certain points you lose, but going in for something that will give you high wins as compared to your losses. You get it? So you can also observe it yourself. If you are trading, you can the 30 minutes observe. If you have an entry rules, observe it yourself and see what they are saying makes sense. So don't just take their words because they are saying it. Those people saying it is their observation. You might not know, maybe they are talking about currencies, because with currencies, if you move to 15 and the 5 minutes, you are going to get a lot of losses. But if you move to the 30 minutes and H1, you get more confirmation. But when it comes to gold moves very fast. If you are relying solely on the 30 minutes, you might miss a lot of opportunities. So you better move towards the lower time frames. So me like this, when I was trading currencies, I was using only the H4 for my confirmations and everything. But when I shifted to gold, trading gold, I've learned how to use the lower time frame. So trading is all about adaptation. You need to make sure you adapt to market changes. Okay, and it comes with a lot of work too as well. Are you okay with me?
Yes, I'm okay.
Yes, please.
Any question again? Okay, if there was no question, see you next week.
All right. Thank you.
You're welcome. Bye bye.
Thank you so much.
Bye bye.
Bye.